Hey, this is Justin with DayTradeTheMarkets.com on Monday, January the 7th, and I wanted to look at a couple of markets that we don't look at too often today, but I wanted to take a look at the NASDAQ and then the Euro and compare a pretty choppy consolidation type day in the NASDAQ, and it was the same way in all the indexes like the E-mini and the Russell and the mini Dow. Compare that with the Euro, which had a decent move higher today. And I wanted to talk about a little trick or a little technique that I like to look at to help you determine when a market is likely to be choppy versus when a market is likely to have a vertical move in one direction or the other. And you can see here, this is a 1 minute chart in the NASDAQ. Same logic would apply on any time frame. It's simple to look at the 1 minute here. You can see the software has various components. You can see the different colored paint bars. Those are what we call relative aggression bars. Decelerations. Here's support resistance zones here, the green and the red. Filter down here, turning green in here. So a lot of different pieces of evidence that you can use to kind of take the whole picture and try to make the best sense of the market you can at a time, and that's what we talk a lot about in our training. But what I want to do, just to simplify the chart here, is remove everything off of the chart except for what we call our level 2 and our level 3 relative aggression bars. And just to give you a little bit of a background, the software provides a lot of different types of evidence. I'm just going to keep these two on the chart right here, the relative aggression bars and the high velocity moves, and talk about a little trick that you can use or a little technique that you can use to help you determine if the market's likely to be in consolidation or choppy, or if the market's likely to have a potential nice move one way or the other. So to do that, let me pause this and remove everything but those. Okay, so at this point I've removed everything, and I just have on you can pause this if you want to look at this chart in a little more depth, but I just at this point have on the level 2 aggression bars and the level 3 aggression bars, as well as a thing we call our high velocity moves. There didn't happen to be any today on the NASDAQ, which, by the way, is an interesting indication as well that there's not much going on in a certain market. So with that said, let's look at our relative aggression bars, and let's especially look at them when they are making new highs or lows, at least over a decent period of time. Doesn't necessarily have to be a new high or low for the day, but a new high or low for the last hour, 2 hours, depending on the time frame you're looking at. So the first one here is this level 2 buying aggression bar, and this happened to be on the high of the day right here. At that time, it was making new highs when that happened. And so we want to ask ourselves, can we get a full bar above? Do we get some quick follow through above there, or can we get a full bar below? Okay, especially if it's on the high of the day or a high of a wide range of time. And you can see in this case we tested above there, but we didn't even get a full bar below. We got a full bar below there. So because we got no follow through on the high of the day, certainly an indication that the attempted move higher by the bears failed. It didn't attract any new aggression, and we're going to at least probably turn over and potentially go test the low. But we want to kind of monitor what happens. Our next one here is a level 2 selling aggression bar. Certainly not on the low of the day, but it's on the low of about an hour. Okay, so not the low of the day, not quite as valuable as information that would be on the high of the day or the literally low of the day, but it's been a while since we've tested this level, and you can see we tested on a level 2 bar, and it takes a few minutes, but then we get a full bar below the bar before the high was even tested. So the thinking would be that the market should continue down in that direction. It's not going to take another run at the high, at least until some new evidence comes in. So then we have the next major structure is this level 3, this extreme selling aggression bar. Now, if you recall, that happened to be in alignment with a support zone earlier that I've removed from the chart. But this one was a low of about 3 hours. You can see it tested this price level around 145, and we hadn't tested that level since about 10 o'clock. This is Eastern time. And you can see we didn't even take out the low. We didn't even test it by a tick. And within 10 minutes or so, we have a full bar back above. So again, we're not looking to extend. We're going to head in the opposite direction. Again, it doesn't mean necessarily we're going to make new highs. It just means that this directional move has petered out. And you can see that when we tested this high, this was the high of the day. When we tested this low, this was a low of about a 3 or 4 hour period. about a 3.5 hour period, you can see both of those got rejected pretty quickly. Pretty good sign of chop. There's no real strong dominant side of the market at this time. You can see this bar was the high of about an hour, had some follow through. This bar got rejected, but these aren't the same type of thing that I'm talking about in terms of was it on the high of the day or the low of the day or the low of, in this case, about 3 or 4 hours. Here's the next attempt, was this level 3 extreme buying aggression bar. Just as an aside, when we get an extreme, like you see here, here's an extreme buying aggression bar and here's an extreme selling aggression bar. Again, this was not necessarily on the low of the day, but at the low of 3 or 4 hours. This was on the high of the day at the time it was formed. You can see here was the previous high of the day, and that level 3 buying aggression bar overlapped it. So when we see level 3 or extreme buying and selling aggression bars, those are very often indications that this is an important bar. Something's going to happen. The market's either going to take off or that was kind of the end of the road. And if you think about a level 3 bar, an extreme buying aggression bar here on the high of the day, I like to think about it in terms of it's an airplane. It's full of gas. You accelerate, you ascend, and then what happens if you run out of gas? What if there's no power left? There's only one direction you can go. And that's the same type of a thing when it doesn't draw in more buyers. Okay, so it's likely the end of the road and we have to go a different direction. Now we get to the end of the day here and it gets a little wild toward the cash close, but that's kind of the idea. So if you look at the broader picture, and I'll compare this to the euro in just a second, when we had a structure on the high of the day, no follow through. Structure not on the low of the day, but a 4 hour low, no follow through. Structure on the high of the day, no follow through. Pretty good indication of chop. Whenever there is an attempt by one side or the other to draw in or attract new buying or selling, it fails. And that's just especially when you get level 3 rejections like we have right here and right here, and I'll show you the opposite of that in just a second. When you see that that's happening, it's a pretty good indication of chop. So now let's have a look at the euro, which we had a different situation. And again, I'm going to take off this, but you can see, we've got high velocity moves, aggression bars. Here's the filter, which is green all day. You can see these yellow zones are also what we call caution zones. Those would normally be red, but what it's telling us is there's a lot of strength in the market, a lot of order flow that's pretty strong on the bull side. So this is an area that we would expect to get pierced. It's something that you want to watch, but it's a caution zone. You wouldn't want to treat that necessarily as a normal resistance area. Same thing here. We pierced right through there. So let me pause this for a second and take everything off except for the high velocity moves, the level 2 bars, and the level 3 bars. Okay, that simplified it a bit. So here again is a euro 1 minute chart, and I just have this on the US session starting at around 8:20 in the morning Eastern time. You can also extend this into the European session. Same logic would apply. But I just want to show an example here. Here again is our first major structure. It's a high velocity move. And again, you notice that on the index market that we looked at, the NASDAQ, we didn't even have a high velocity move. That's also an indication that there's not really any directional dominance within the market. You can see this was on the high of the day when it was made. We had follow through. Okay. Here's another high of the day at the time, level 3 bar and high velocity move. Quick follow through. Okay. That's showing us that the buying is attracting buying. Here's another high of the day, level 3 buying bar. You've got this bar on the high and this bar on the high, but there was no real pullback, so I look at that as all as part of the same wave, just to be a little bit more clarified. A little bit of a pullback here, new high right here. Not immediate follow through. We do test the low and have another bounce higher, but you can see then when we make a new high on this bar and this bar, no real follow through, no full bar above here, certainly no full bar above here. It doesn't mean we're going to sell off. It just means that vertical move is likely come to an end and we're probably going to be into more of a consolidation mode. So again, when you look at these major structures and if we ask ourselves, is there follow through or is there rejection? When there's follow through, it's a pretty good indication we're heading in one direction. When there is rejection, it doesn't mean necessarily we're moving in the opposite direction. It just means that we're likely in for this type of a scenario. Okay, because there's no real conviction within the market. So hopefully that helps. Again, this is just one little component of what we look at and what we like to talk about. But the whole idea is that you're taking various pieces of evidence to help you. Not that this is some holy grail or some magic indicator or anything like that. If that's what you're looking for, this is not for you. But if you are the type of person that is looking for a way to increase your edge, if you're looking for a way to help you make better sense of the market. And there's a million different things we talk about, but this is one of them: consolidation versus potentially a vertical type of a scenario. And we like to look at what the evidence, what the actual order flow in the market's telling us. So that's the idea here. Hopefully that makes sense. If it didn't, let us know. Info@DayTradeTheMarkets.com, and we can certainly clarify further. Other than that, hopefully you have a good evening, and we'll talk to you soon. Thanks.